It's time for a gold market update. Gold futures in US dollars are now at the highest level since September of 2013. They are above $1,400 an ounce. At least yesterday they were. Today, gold price is back down to $1,400. And silver has rallied a little bit. It's even up to $15.37. So good news for gold. The mining shares are catching a bid. I talked about a case study about Kirkland Lake Gold, which is probably the most talked about gold stock in the mainstream financial media right now. But one of my China sources brought me some really very interesting information. Some of you may want to take it with a grain of salt, but the information that comes out of China is not always accurate. But some of the stuff that was told to me last night by my source was very interesting. So I put it all, condensed it into a Word document so it's easier for me to read right now. And I'll read it to you and we'll see what everyone says later. So first of all, this is the same source that was talking about higher food prices and potential shortages. There was a Bloomberg article that actually came out talking about China's food is only going to get pricier, talking about now the armyworm that's in grains that's going to cause a harvest problem, and then you have all the news that everyone knows about the swine flu, the bird flu, etc. So there is additional information coming out about the potential problems with the grain harvest with the armyworm. So the same source sent me that article after he told me the other information. Okay, so let's talk about what my source said about the gold market in China. There's some really interesting stuff here. So first off, there's 4 things people need to know about gold and China if they don't already. Number 1, China is the largest importer of gold. Number 2, China is the largest producer of gold, even though China doesn't have the best geology. So in the past, South Africa used to be the largest producer of gold. Now China's the largest producer of gold. They pulled a lot of their gold reserves forward. And from the sources I've spoken to, like Jim Rickards and other people have said similar things, the gold production in China is not really economic. The Chinese government subsidizes it. And a lot of the gold mines in China with the massive amounts of gold production, they're not economic. But the Chinese government subsidizes it, and the Chinese government buys up almost all the gold. I've heard estimates of some of the gold mines in China that it takes $2,000 or more per ounce to produce the gold. So that's how uneconomic and difficult it is to mine some of these gold mines. So number 3, it is against the law to export gold for any purpose. So this is something that most Westerners are not familiar with, but this is also confirmed by another source from Jim Rickards. If you're familiar with Jim Rickards and his Physical Gold Fund podcast, which is free, he interviewed a Swiss gold refiner who had been in the industry. This was a couple years ago. He interviewed a Swiss gold refiner who had been working in the industry for decades. And the guy said he's seen gold from every country on the planet except for China. So now that would confirm things. He said he's never seen a Chinese gold bar, a kilo bar, to recast at his Swiss gold refinery, and it was one of the top 2 or 3 gold refineries on the planet. So he said he sends a ton of 4.9 bars, the kilo bars, into China, and he said they almost never come out. And so this would confirm that it is against the law. It would confirm what the Swiss gold refiner said, that it is against the law to export physical gold out of China for any purpose. Now, maybe gold jewelry can be smuggled in and out, but it seems for bullion and bars and coins that it's against the law. Although I think at some bullion dealers they're allowed to buy pandas. I'm not sure how that works, but I guess in most instances it's against the law. I'm not sure how it works with the Chinese silver pandas and gold pandas. I'm not sure what the exemption is for that. Maybe it's just a smaller market. I know those are highly collectible though for the numismatic pandas, the long dated ones, the ones that are older. 4, lastly, gold cannot be purchased in cash. So there must be a credit card trail and a link with a name and an address at bullion dealers in China. No cash allowed now. So I found that interesting. This fits, though, with how a lot of Chinese societies already cashless. People in China use a lot of smartphones to pay for things. And with the China social credit score, there's the ability, and my sources talked about this as well, that China wants to see your credit card bill. They want to see if you're buying a VPN. They want to see if you're buying things you should not be buying, and then they could ding your social credit score. So this would make sense that they're trying to track and tax every transaction, and if they see that you're buying things they don't like you to buy with your credit card, then they would ding your social credit score. Okay, so I asked my source about the Shanghai Gold Exchange. My source says that the data, I sent my source the newest article from Roman Manley, a Bullion star, and he's pretty well respected in the gold community. I believe Kuz Jansen, whose real name is Jan Nieuwenhuis, I think, used to write for Bullion Star. He doesn't anymore. And Roman Manley does the conversions of Mandarin, or at least he hires someone to, for the Shanghai Gold Exchange. He takes the data, which is with the withdrawal data in Mandarin, translates it to English, and then publishes articles about this on his website. The article that was just out on June 4th, 2019 said that in April, 152 tons of gold were withdrawn from the Shanghai Gold Exchange, and that China is still on pace to withdraw massive amounts of gold from the Shanghai Gold Exchange, just hundreds and hundreds of tons. In the past, they've taken out, let's see here, almost the world mine supply. So in 2018, it was 2,055 tons, according to the data that Roman Manley has. 2017, it was 2030, and already about 680 tons or so has been taken out in 2019. Well, what my source said about the data from the Shanghai Gold Exchange, he says it's a lie, it's a farce. He said all the transactions on the Shanghai Gold Exchange are settled in cash. There's no way to take out the physical gold from the Shanghai Gold Exchange. It has to stay in a Chinese vault only. So he said the gold withdrawals are not allowed to leave China. They have to stay in China, and the gold has to stay in a Chinese vault. And second, he says that the private gold demand on the Shanghai Gold Exchange is actually weak from private citizens. Private Chinese on the Shanghai Gold Exchange is weak. That the physical gold that is purchased on the Shanghai Gold Exchange, it actually occurs by the Chinese government. So it's like a separate entity. It's like a fake dummy corporation or multiple dummy corporations where the bars are created, it's put on the market on the Shanghai Gold Exchange, and the Chinese government buys the bars itself. And then it's labeled as domestic gold demand. So it doesn't mention that the demand is from the government in the Shanghai Gold Exchange data, the withdrawal data. So my source took a look at that Roman Manley article, the newest one. I'll attach a link to it in the information section of the video after it's over, and you could take a look for yourself. But he says basically demand for physical gold in China is strong, but that the Shanghai Gold Exchange, a lot of the numbers that are reported are fake. So real demand numbers could be a lot larger or a little bit smaller, but those are not the real numbers. And he extensively read the article, like I said, that I sent him. In China, gold is considered a strategic asset. That is why China is so dishonest about its gold accumulation. China can make up any numbers it wants. This is what my source said. The Chinese government is accumulating a lot of physical gold, but the Shanghai Gold Exchange withdrawal data released on their public website in Mandarin is most likely false. My source, however, says that Chinese bullion dealers are hoarding physical gold if they have supply now, which is rare. So my source has extensive contacts throughout all of the physical bullion dealers in the major cities in China, and pretty much, and this is the most interesting part here that you guys are going to want to hear, pretty much all the bullion shops in China in the major tier 1 and tier 2 cities are currently out of bullion. And if they have bullion, it's being hoarded. They don't want to sell it because they expect the price of gold in Chinese currency, in RMB or Yuan, to go up. And if you look at the chart for gold price in Chinese Yuan, it's gone up a lot since mid to late March. It's gone almost vertical. And it's also up a lot in the last year, since July of 2018. So it had one correction in, looks like January or February, and it bottomed out and then it went back up again. So the gold price in Chinese currency is going up a lot. And there are very few, if any, sellers of gold in China. A lot of people are buying like crazy if they can get supply at the retail level. According to my source, there is a waiting list now for bullion in China, in Shanghai, Shenzhen, Tianjin, Wuhan, Xi'an, and every other place my source has checked. Gold jewelry is for sale, but at huge markups. So this is bullion. There's a waiting list for bullion, according to my source. And there is no selling of physical gold from people who have bought the gold. All of the sellers are holding on for higher prices, including bullion dealers and the retail owners of gold. And the source mentioned the gambler mentality of Asians. So once they start buying, they don't stop until they are burned and lose money. And the gold price in China, the chart is going up a lot, like I said, since mid to late March and May. It's gone up a lot. So it sounds like Chinese gold demand is very strong right now, but it's impossible to know an exact number or amount because of how dishonest China is with their economic data. And it sounds like the Shanghai Gold Exchange withdrawal data, which is what the gold community tends to believe basically wholeheartedly, which is weird because a lot of the other Chinese economic data, pretty much everyone else agrees is fake. But people believe that the Shanghai Gold Exchange withdrawal data is honest. So my source says not to believe that either, but my source says that demand for physical gold in China is strong and that there are now shortages at the retail level for bullion, and that the majority buyer at the Shanghai Gold Exchange is the Chinese government using basically like one hand makes the bullion and casts it and the other hand buys it. And there's also, I guess in the Chinese stock market, the Chinese gold stocks have been going limit up. So yesterday they went up, limit up. There's a 10% rise or fall limit per day on the Chinese stock market. And every one of my sources' gold stocks was up 10% yesterday or limit up. And apparently there's a lot of demand to buy more Chinese gold stocks on the China stock market. There may be millions of buyers waiting to buy more gold shares in China. My source also thinks that the gold price now, people are looking at the gold price in dollars in China, and that has also caused a buying panic in China. That people are seeing the gold price in dollars, and that makes them think that the gold price in RMB, because of the dollar peg, is going to make them go up higher. And remember also there's higher food prices and other inflationary pressure in China. So all of these factors together with a potential shortage of bullion at the retail level are making a buying panic in China. But my source thinks that if China gets in enough trouble, that they could potentially have to sell some gold. So he doesn't think China will do a gold-backed RMB. That's nuts. With China's credit bubble, it's impossible. China doesn't have $40 trillion of gold, and they won't let any gold leave the country. If you do a gold-backed currency, if you do a gold standard or gold-backed currency, the gold would start to leave, and China doesn't want that. And other people are talking about these oil futures, gold-backed oil futures, RMB oil futures. It doesn't sound like that's going to work either. So China is still accumulating a lot of gold, but it sounds like the Shanghai Gold Exchange data is not to be trusted. So whether you believe it or not, I reported the information I got. It's very interesting stuff. It's going to conflict with a lot of the other reporting that the gold community takes, because the gold community now, the Shanghai Gold Exchange withdrawal data is the stuff that people are 100% believing. Meanwhile, if you talk to a lot of financial professionals who are in the gold community or not, they will tell you that they don't trust any of the other economic data coming out of China. So there's conflictions here. So I just reported to you guys the information I was given, and you can believe it or not, but things are getting very interesting in China. There was also a really interesting article that came out yesterday, but I found it today because it got sent to me in my LinkedIn feed, and it's talking about how smaller gold miners, my dogs are barking in the back. It's talking about how smaller gold miners, their cost of capital is double what it used to be in the past. So I'll talk about that. I'll attach a link to you for you guys to read that. It just says that in the past, some of the gold miners could raise capital at 5 to 6%, But now a lot of the smaller gold miners, they're paying 15 to 20% interest, which is like high credit card stuff. Okay, I'm looking at the questions and comments. Tomcat says China's running another scam from the sound of it. Well, I think China is probably lying about the Shanghai Gold Exchange withdrawal data from what it sounds like, but they are importing a lot of physical gold. So I don't think anyone can deny that. The evidence from the Swiss gold refiners with the interviews that the Swiss gold refiners are saying, and the data that we've seen from like the LBMA that has been released, some of the data from the export of gold out of London. There's a lot of gold is going into China, but it sounds like that the private sector is not buying it on the Shanghai Gold Exchange, that the government uses the the Chinese government uses the Shanghai Gold Exchange as a cover to import gold like it's private sector demand, when they're really using that to move it around into different places. That's what it sounds like to me. No, I think the main reason for the gold... Pablo asked, what is the main reason for the gold breakout? I think the main reason for the gold breakout is that the market saw the Fed dot plots and saw that it's going to lower interest rates. And when there's lower interest rates, there's no incentive to go after high yield bonds then. They're risky. So the market then, you're not getting paid... The right way to say this is you're not getting paid interest to not hold gold. So if the treasuries are going to keep going down and down and down in the yield, then gold is going to look more attractive. So this is why you're seeing what professional money managers are calling a barbell strategy. This is why more money is going into US treasuries, but it's not for yield. It's for safety, and it's for betting on principal growth. Normally, though, people invest in bonds, not for principal growth. They invest in bonds for yield. They invest to get some type of guaranteed secured yield. So the demand in treasuries and bonds is not the normal demand that would have been in the past. Because in the past, you could have gotten 5 or 6% guaranteed in US treasuries. And then there would have been less incentive to own gold because you're getting 5 or 6% per year. Do you understand what I'm saying? So if you're getting 5 or 6%, there's no incentive. There's a disincentive to hold gold. So when bond yields are being driven down through financial repression, through market manipulation by central bankers, and Japanification, this is why you're seeing distortions in the market with the barbell strategy. And the barbell strategy is people own gold, people own US treasuries. And in a lot of professional money managers, they would say that that doesn't make sense, but that's kind of like a hedging strategy. The barbell strategy is a hedging strategy. So I reported the information I was told, and I think it's very interesting. A lot of the stuff is tough to verify, the information coming out of China, especially with like the Shanghai Gold Exchange. There's just a lot of conflicting reports. The stories, we occasionally get something from Reuters or the AP about Chinese gold market demand. But from what my source just said, the demand for physical gold in China has exploded, and that even the bullion dealers, if they have supply, are hoarding it. And they're expecting much higher prices in US dollars and in RMB. But unfortunately, the gold industry just believes the Shanghai Gold Exchange withdrawal data, and I believed a lot of it too. But you know, the more I learn about China, the more I learn not to trust a lot of the information that we've been given. The funny thing, you know, I talked about Alibaba on another video, and Alibaba in their last earnings call for Q1 2019, they didn't even talk about any of their earnings or financial numbers at all, which is a big red flag, but no one seemed to care. You have all these articles on Seeking Alpha talking about how bright the future is, but the management team refused to talk about any of their financial data at all. So there are red flags. There is serious trust issues in China. If you don't believe me, go watch the documentary, The China Hustle. I think it's one of the best documentaries I've seen the last couple years. One guy says, dude, can you please ask? Oh, I just got a large super chat. Thank you. 15 bucks. Thank you, Tomcat. I appreciate it. Okay, complaining about not getting your question asked in the super chat. Literally, when I have over 100 people watching and lots of comments coming in, first of all, I don't see all the comments. So if a lot of comments are coming in at once, normally I'll only see a couple of them at a time. The stream is just not that fast. So I don't have time to answer everyone's questions. I think I covered most of the information. If you have a valid question, I tell people this at every live stream I do, put it under the video. If you have another question, put it under the video. I only have one super chat. Oh no, Joe put in one too. It only updated one though. Okay, thanks Joe for the super chat too. I appreciate it. So 2 super chats today. It's pretty nice. A little bit extra beer money. Kirsten asks, how much is silver to mine? So the lower cost with the oil price retreating a little bit, it's probably going to be in the $12 to $13 range right now. So First Majestic Silver was in trouble about 18 months ago. They could not lower the costs at their mines anymore without making very big capex investments into Santa Elena upgrades at the mine and 1 or 2 other mines in order to lower costs. And they drained a lot of the cash on their balance sheet. They did do a smaller capital raise because they couldn't do any larger than that. And they drained the cash on their balance sheet, which they had always kept at $100 million. They drained it down to $50 million, which was dangerously low. But now First Majestic Silver seems to be through that as they've have gotten the upgrades at the mine online. Endeavor Silver, another example is Endeavor Silver recently. Endeavor Silver is running into very, very similar problems as First Majestic Silver. And Endeavor Silver announced recently that they have to make big capex upgrades at their mines to cut costs further. And they're probably not going to be able to generate any type of profit or free cash flow at their mines until at least Q3 2019. So that's months away. So Endeavor Silver's costs are rising. So if Endeavor Silver cannot make a profit at the current silver price, what are their costs? Their costs are probably $15, $16. They're treading water or they're losing money. And there was one idiot who I blocked. I can't believe this guy even believed this stuff. This guy had to be brainwashed or on drugs or something. He was either brainwashed or on drugs or just really dumb. One of those three. It can't be anything else. He was adamant that silver miners produce silver at $4 per ounce and sell. Kitco buys a lot of silver at $6 an ounce. And I know a lot of people in this industry. Wholesalers do not get that type of discount on silver. You have a $15 spot, $15 and 37-cent spot price. Wholesalers are not going to be able to buy physical silver at $6. The only way you get silver that cheap is like a widow or an orphan, like an a large estate sale type of situation. So that's where like someone's family member or loved one dies and the person inherited a ton of physical silver. They don't know how much it's worth, and they take like a monster box or physical or silver jewelry or bars. They take it to a refiner or a wholesaler or even a bullion shop, and the bullion shop may be a little bit more honest. But normally with the refiners and the wholesalers, if they can tell, it's like a bad used car mechanic. It's like a bad car mechanic who tries to rip off like the woman in the minivan and mark up, like, say you need all this other work done and overcharge her by $500 or $1,000. But because this happened to my brother. My brother was doing rummaging in like these estate sales, and he was buying storage lockers that people forgot to pay the things on, and he got all of this numismatic silver and antique silver, and he tried taking it to some refiners locally, and they tried to offer him 40 cents on the dollar. So no one gets to buy unless you're going to an estate sale or you're potentially risking getting ripped off at a refiner or a wholesaler, and you're just trying to liquidate like something you inherit, silver you inherited, and you don't know what the value of it is. They're not gonna pay 50 cents on the dollar or 40 cents on the dollar. That's just not how it works. So we'll see what happens in the gold market and the silver market, but this is, like I've been saying now for months, these are prices where the miners, and especially with that Bloomberg article I just talked about with the cost of capital for the miners to borrow debt, where the miners, if the gold and silver rally continues, a lot of these miners are going to do big equity dilutions in the next 4 to 6 months. We'll see how long the gold price stays. If the gold price goes to 1,400 or 1,500, the probability of more dilutions would increase. So temporarily, that may cause some share prices to fall a little bit. It depends how the miner uses the capital. In general, I'm against dilution. That's why I like the royalty and streaming companies, because the larger ones rarely have to do dilution. Okay, well, that's it for this update. There's a bunch of mining stock questions coming in. I don't answer every single person's question. There's literally like 60 or 70 comments in the chat section. So I shared the information I got from one of my China sources. You can believe it or not, but I shared it publicly. And I will put links to the articles I mentioned after the video's over. Okay, guys, bye for now. Everyone have a great weekend. I'm going to go lift some weights and have a relaxing weekend. The weather's really nice out here. Okay, bye for now.